We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Guido Van Stijn, Managing Director of Aurus. How are you today, Guido?
Thanks, Tom. Yeah, I'm doing quite well. As you can see, it's evening over here right now. I'm in Dubai at the moment.
Yeah, it's a very interesting backdrop that you have for us this evening. So why don't you start by telling us a little bit about your background in the precious metals industry and how you came to be involved in Aurus?
Well, I've worked in this industry for 15 years now and was actually first involved in mining. Investing in mining companies, research analysis. After that, started in brokerage services throughout Europe. From the most Western European countries, we've serviced clients over there. And we came up with the idea in 2017 of combining precious metals and blockchain technology and launched the first, we did it as a decentralized setup. And so we started in 2018 building, and recently here in Dubai, actually at the Dubai Precious Metal Conference, we had quite a party afterwards. We launched our V2 of the Aurus ecosystem.
So how do you perceive the current economic and financial landscape, and where do you see the physical and tokenized precious metals fit there? Like why are the precious metals and the combination of blockchain so important in today's economy? Well,
definitely, there are multiple aspects here. First of all, we are entering into an inflationary landscape at the moment, which I believe, and together with a lot of macroeconomics also, will not be a transitional phase. Protecting yourself from against this inflation has always been gold's role, and to a certain extent also silver. Having global liquidity there, or we also always had the means, coins, physical bars, which are fantastic products, of course, to protect yourself. But liquidity-wise, you have logistical issues. You don't have the global liquidity. Now with all new rules, you have difficulties maybe selling it out if it's not to your trusted broker. So marrying the two together, blockchain technology and precious metal, creates a whole new landscape where these traditional brokers, but also new parties, can actually entertain each other in a whole new way, not only dealing with themselves, but offering global liquidity. Having a token that can be bought at spot pricing at fractions of a gram creates also a better margin structure for the retail client, whereas in the past you have to buy a 1/10 of an ounce Krugerrand or a 10-gram bar, where markups are quite significant. So this is the first part of where it becomes very apparent and important for the precious metals industry. The other thing is, the old industry was more a buy and store kind of setup. It misses out on a lot of things because you still had the frictionless, non-frictionless trading. You had the high cost of storing the metal, insurance, etc. And the landscape has been evolving a lot in the past 12 months. And what now comes into play is the decentralized finance opportunities, where you can actually make a yield on your precious metals holdings instead of just stacking it and paying the cost for it. And that's where it gets really interesting, of course. So for the mining companies at the moment, and for the precious metal dealers, brokers, vaults, it gives them the new opportunity to tap into an untapped market of younger, eager demographics that are not looking for a gold coin or a gold bar. Yeah, maybe to flash it out on their coffee tables when visitors come in, but by all means, they rather have it in a wallet with a protective card and use it on demand, because that's also what this generation wants. They want on-demand satisfaction. Everything has to be instant. You cannot do that with a centralized solution, not even if it's a bullion trading platform, not even if it's an online store. that can only be done via this new technology. And you see that already happening, of course, if you see transactional flows and how easy it is. I mean, I can send from my Aurus wallet, the app, to you tokens in a matter of seconds on our payment channel. So that's quite impressive and new.
So exactly from that standpoint, Guido, how do you try to make it easier for people to use the product? Onboarding into the crypto world can be a daunting task. So how do you try to facilitate that?
Well, we are merging the traditional industry with this new market. We're not stepping away or competing with them. We are a tech company and we built this software stack for the traditional market. So your broker in Canada or in America or whatever you are using to buy the coins and bar can also partner in our ecosystem. And we already have 25 partners in the V2 launch. So if you're a client of us in Turkey of Aurus, you're actually a client of the broker. You have been buying coins with him. Now you also buy tokens from him. So it's still very easy because the landscape doesn't change for you. You just now buy something digital where you used to be buying something physical. The only thing that changes for you now, you have added layers. So you can now also sign up for an account at a centralized cryptocurrency exchange and sell this token for a Bitcoin or for Ethereum. You can go to a decentralized exchange and sell it for Ethereum or some other token. So there a whole landscape of liquidity opens up for you, and you can decide on how you want to on-ramp or off-ramp into this market.
So what are the benefits and maybe flaws of tokenization?
I think the benefits, if you look at tokenizing of metals, is of course the first one. It's much more affordable than buying physical in your hand. I'm a big fan of gold coins, by the way. I have some of them. I like to look at them. But still, there's a markup, there's logistics. It's also a little bit more difficult to get out of the market. In this case, with tokenized metals, if you want to spend $10, you buy it at a fraction above spot. If you then want to send it, it will cost you nothing. If you then want to earn yield on it, you stake it in a DeFi pool, and you're going to earn 3% on your holding instead of 0 or negative rates on your saving account. And that's make it super interesting. You can use it. It's like I said, the past is buy and store. The future is accumulate and spend and transact with it. Bless you.
Thank you. So what are the different tokens and what do they represent, Guido?
Well, our ecosystem has 4 tokens, which we 3 of them are for our clients. So our clients tokenize their metals, gold, silver, and platinum, which they sell into their local market, being in Turkey or Chile or London, where we have our headquarters. The other token is Aurus DeFi, and that's our native project token. Aurus DeFi actually is what makes our system decentralized and also makes the community participate in the trading of the metals. So every time our tokens are minted, traded, burned, sent, are transactional fees generated. For instance, if you take gold, 50% of these rewards in the transactional processes made go as a reward to the Aurus DeFi pool. And if you own Aurus DeFi, you can stake it via the app, and only the staked tokens that secure also the network that are part of these rewards in their wallet paid out. So you're actually, by holding Aurus DeFi, you earn gold, silver, platinum. So it's the perfect hedge against market volatility, for instance. Instead of buying a derivative on the gold, silver, and platinum, you can now buy a token that actually rewards you if trading increases.
So how does it actually work, Guido? Do you buy gold first and then sell it into a token? Can you buy tokens and then it is backed by gold? How does that exactly work?
All the precious metals tokens are one-on-one backed by multiple. We have multiple. We don't have multiples. You have to understand, we don't tokenize anything. We don't run our books. We don't have any gold as ours, the company. That's also the different setup we chose. We are a UK-based association that empowers the metals industry who want to enter this market. So they don't take the high run-up cost making exchange listings, building expensive software, which can be difficult. because smart contracts are not the easiest to make. And our partners tokenize this. So, for instance, a partner tokenizes a stash of gold, stores it in Montreal, for instance. We have a facility, one of our partners there, and then it's on the market. Its client or our partner can then sell it to its clients, or can sell it into the open market on exchanges where our tokens are listed, or put it in DEX pools and earn some interest on it. And all these vaults are, of course, audited and have the custody reports. And there are 6 locations at the moment right now. So it's a quite decentralized setup. No single point of failure. Multiple vaults, multiple partners, not one person running the books. There are market makers in between. So you cut out the centralized part and the single point of failure, which makes it the safest solution.
So what is the advantage of somebody becoming a partner for you guys?
Like I said, I mean, the run-up cost to do that yourself, I've seen multiple projects out there that quite failed because there's high cost in not only the tech stack, but also the maintenance, and then also high cost in getting listings in place that can cost between $100 and $1 million. And then also there's the liquidity issue because you have to front fund liquidity if you don't have any pools in place. So all these things together, we arrange it for our partners. We make sure there's a market there. We make sure there's market makers on the books already active, and they tap into a plug-and-play solution. So they enter this whole new space with younger demographics, untapped resource for them, and they have, of course, pay a tokenization fee for the product they mint. So, for instance, they put a market bar of gold in it. They pay a tokenization fee of 0.5%. That's it currently. And then they can use all the tools we put in place, a cool app which can be available if they are, for instance, from a country where the language is different. We add the language for them. We put them in the app as their point of entry. So if a client from their country comes into the app, they pop up as a broker to buy the product from. We empower them by super secure vault cards that can digitally sign transactions, which we offer to our clients. We have payment terminals we offer to them. So there's a lot of advantage for precious metal industry players to join the ecosystem. And that's also probably why we already have 25 partners.
You mentioned that the premiums are quite low on this product. So how do you ensure that you can, let's say, source that material for a fractional premium?
Well, the markets work arbitrarily. Yeah. So if you have multiple listings, multiple DEX listings, and brokers in between, as soon as the item hits the market decides the price. So the broker can ask the premium to its client, but the price can be a little bit different, for instance, on an exchange. And on the exchange, the spread will always be super small. And you see that already. The spreads are like maybe some points even 0.5%.
So let's take one of the gold tokens, for example. How much gold is that backed by?
It's always one-on-one. One-on-one. So, for instance, Turkey, we have on Bursa Istanbul, our partner put 10 kilos there. That means that's 10 kilo there. He cannot sell 11 kilos because there's a dual signature there. So there needs to be an audit report backing that amount. Then our partner in Chile puts also in 10 kilos and he puts it in rings in Zurich, for instance. Then you have a partner in Singapore, put it in Singapore in the vault over there with Malka and Meat. So you have all these different partners put in the gold. It's always one-on-one back with each other. And right now, like I said, I'm in Dubai now. We are for a week for the Precious Metal Conference. And we line up some pretty big partners that are going to be boarded in the next couple of months.
So is it like one of the gold tokens is backed by 1 gram of gold or how does that work?
Yeah, the denomination of all the tokens is 1 gram. So it's 1 gram of gold, 1 gram of silver, and 1 gram of platinum.
So how do you think about improving the issue of many financial institutions and investors that hold precious metals that end up paying high storage costs with no ability to earn a yield?
I think we're already doing that with several DeFi industry players. That actually you can go to this network. For instance, we have a company called Moonfarm, and you can actually stake your tokens there. With staking, I mean locking them for a period of time in a wallet, for instance, 24 hours, 30 days. And depending on the length and the duration, the yield increases. And so the current pools we have over there, you can get quite some on silver holdings, for instance. And then after a month, for instance, you take it out and you earn, for instance, 3, 4, 5%. This is game changing because this was never possible for retail clients in the past. And right now we see also quite institutional appetite coming in because they want to also do a dual bet. So it's not only single asset staking, but multi-asset staking. So for instance, we have talked to institutions that say, why don't we put gold against Ethereum? And we provide both sides. So let's do 4 million here and 4 million on the other side. And then by pooling both assets into trading pools, they get revenue on both the assets. So from an institutional perspective, in an industry that has been growing insanely, the DeFi market, this is opening up for them also at the moment. And they see the opportunity that the yield is there to be made.
Another problem that people think about when looking at a program like this is the settlement time. So how have you addressed that?
Well, if you look at the London market or any other big market, even in the US, the settlement times are T+2 or sometimes T+3. The settlement is instant with us always. The settlement is depending on when the block of the transaction is mined. And on our payment channel layer 2 that we have now launched in our new update, because we have not only a multi-asset approach, but also a multi-chain approach. So we don't use one blockchain technology, we use multiple to offer the fastest settlement times. And then you're actually talking about a difference between one blockchain can offer a 30-minute settlement, while the other offers 10 seconds and the other one offers 2 seconds. So yeah, choose the fastest or the least expensive, whatever you want.
Well, does the, let's say, speed and cost of the transaction also come at the expense of the security of a transaction like that?
No, because it's all cryptographically signed, all transactions at the end. Even the layer 2 is at some point settled on the Ethereum blockchain again.
So who pays the vaulting fees, and what have you done to try to keep them low, Guido?
The vaulting fees for gold, there's no vaulting fee. I mean, it's offset by for the provider by their revenue they get from the transactions. So every provider that puts in some stash will get revenue over the amount the bullion is flipped. And all providers are also incentivized on our part with our native token at the moment. So they have an additional source of income there. With Silver and Platinum, that's a little bit different. It's still paid by the provider. And they, but that's more of an exotic metal, of course. We see that gold is traded more than silver. Silver is more now used also for the staking purposes and the pools. And platinum, we launched it a couple of months ago, but we're actually going to put it on the exchanges together with our partners in Q1 by focusing first on the gold and silver part at the moment.
You mentioned the market that you've made for it, and that really is there to provide liquidity for users. So how do you ensure that there is liquidity there for your users to be able to transact?
Well, we source liquidity also. That's why we work with financial institutions. We have market makers that actually provide books, so liquidity is there once it's needed. And that's also why we have decentralized setups where decentralized liquidity pools are present, which can then also be used for centralized liquidity. So it's not only liquidity, by the way, for the clients of our partners. It's also liquidity, of course, for the partner themselves. Because if our partner wants to get out in euro, dollar, or British pound, he needs to be able to.
How have you built what you call a collaborative system? And what does that mean to you, Guido?
It was the most difficult part. And I had to rely definitely on my network in the gold industry and the network of our board of directors. If you look, our partner, our board also who's behind it. We have Jason Toussaint, ex-CEO of Spider ETF, the biggest in the world, and CEO of the Gold Council, Tony from the biggest refinery in London, Grant from the biggest in the US. They have been knocking and opening doors, because if you build a decentralized setup where you actually dependent on your members and your partners to get their knowledge in building a product, you cannot say, hey, I'm going to put 10 million of gold, put it on the blockchain and start selling it. No, they need to be able, secure and knowledgeable enough to do this. So this has been quite the hardest thing in the past 3 years, educating our partners, making them feel comfortable with the technology and listening to them and building this version 2, because this version 2 was the biggest collaborative thing we did with the industry so far. Doing in-depth interviews, not only with their top management, but also with employees, how things should work. Also, listening to their clients, what they think should be in an update. And this V2 launch now, it's only the first part of a long release the coming 6 months, where the app, the website, and also the tech stack will be updated very, very frequently.
So how can this really be used up the entire supply chain, let's say from mining to the end consumer?
Of course, it's a traceability system. If you look at how our system works and why it's also very, it works on also a non-fungible system. We have NFT tokens that actually identify gold, silver, and platinum bars and in which vault they lie. So you have seen the NFT craze probably going on, but we already used NFTs in 2008 to make a unique identifier of the bar, where it is in which vault. If we're going downstream, we already have some R&D projects in place with mining firms where we look how we can actually tokenize a certain reserve asset of their mining company, which enables you, in fact, to buy gold at a discount when it comes to the market, and it switches then automatically to the fungible token, what will be your upside then, of course. That's a big technology thing that we're looking into right now. On the DeFi sides, of course, you also look at derivatives that you can do upstream. So not only downstream, but also upstream. There's a lot of innovation still waiting. So the entire industry can actually tap now into something new, where a lot of money is being put into at the moment, which has been increasing insanely over the past years, and most likely will continue to grow, definitely with the current financial system not being able to cope with user demand if you look at interest rates or financing solutions. So there's a lot of innovation that's going to be happening here, and how the traditional industry can benefit from a product that, like ours, that is based on members and empowers the market, and not benefiting from book trading ourselves.
So Guido, you mentioned the vault card earlier. What is that, and how does that work?
The vault card works in tandem with a couple of our solutions that we made for our partners. So not only the app, but also the POS terminals. It's an NFC-enabled card, so it works on your Android phone and your iPhone. It's a vault signer card. So instead of having key phrases while opening a wallet, which you need to remember, write down, and if somebody steals it, hey, that's a pretty big problem, or you save it on your phone. This card replaces that. So no more key phrases, no more things. It's a super secure digital chip that actually can be used to sign your transaction, your digital transactions in the vault using this card. And either it can be signed on the POS terminal or on in the app.
Okay, so it's not like a MasterCard or a debit card of some sort.
No, well, okay. We don't have a network like MasterCard or Visa. You're really far from that. But it can be used for simple things with our partners. You can pay with the POS terminal, and people can pay gold peer-to-peer to gold, which is what you want. You don't want a Visa or MasterCard backed by gold, because you will lose a lot of money. There's a sluice in between, a lot of back office, and a lot of transactional fees need to be paid, because there's a Forex going on there, an FX issue. So keeping it peer-to-peer, if you have a gold bar you want to buy and you have the same amount of gold on your card, then this industry works in tandem together, because you saved it on the card and now you can buy the coin or the bar at one of the partners.
So considering that it's peer-to-peer like that, that makes it really usable across the world. It's not necessarily confined to one country or another. Is that right?
No, absolutely not. And depending on the legislation, because our legal opinions are in most countries valid, but not in every country. If some client or a partner wants to install a payment terminal in his art gallery, for instance, or wants to have a terminal in its Forex house to also sell, because the POS terminals work both ways, buy and sell, and he wants special cards to be offered to his clients. Of course, that's a solution. It can be it's very easily scalable and user friendly.
Excellent, Guido. What is the roadmap and the future look like for Aurus, and what are the next steps, let's say over the next year, that you're looking forward to?
Right now, besides our office in London and Amsterdam, we're opening an office here in Dubai. Working here also closely with partners, tapping into some trade over here. We're going to announce a lot of new partners in the coming months, which we signed not only recently, but also in the past months, because signing up a partner doesn't mean the partner has to be really knowledgeable to start the next day. So there's a lesson and educational part. We always offer them. We do research together in their local markets. What's the best setup strategy to get the traction they need? This is going to be a big part. DeFi is a focus of us, a big focus. We hired quite a lot of people to focus on setting up more decentralized pools. And we got to have a lot of tier A listings also in the next couple of months to offer more global liquidity besides the local solutions we already have. So big global liquidity for our partners and the clients of our partners, and more and more local setups.
Excellent, Guido. Is there anything else you'd like to mention before we wrap up here?
No, I think this quite covers it. People can just go to the website aurus.io. It just has been revamped, and I think a good first way in is downloading the app. And if you want to order a card, it can be done via the app. And step your way into this entirely new world of holding precious metals. And it's not, don't compete it with your own products. Still keep your physical bullion also. I'm still stacking also my coins and my bars. But having this product on the sideline, definitely in the current situation, economic situation, it's the way to go.
Excellent, Guido. We really appreciate your time today. Thank you very much.
Thanks so much, Tom. Bye-bye.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.